Australia's cryptocurrency regulators are trying to venture into uncharted territory. They're indeed making a bold move by trying a new policy unlike anything they or anyone else has ever done. So, how will this policy work? Will it fail, or will Australia act as an example for future policies of other countries? Now, in this video, we're going to talk about Australia's plan for crypto regulations that has never been done before. First off, Australia's attempting something that hasn't been done before. How will this turn out? With the new hype and focus on cryptocurrency in today's world, it's no wonder that countries are going to focus on more policies towards it. With so much demand and importance given to this form of currency, there's literally no way to ignore it anymore. So Australia took the initiative for a few regulations. The Australian Treasury launched a multi-step plan on Monday to create a framework for regulating cryptocurrencies that it believes will be more detailed and knowledgeable than those known in other places elsewhere in the world. This is an attempt by the country to get an advantage in the crypto market. Token mapping, a kind of market research, will be important to the government's goal. Token mapping will help regulators better identify how crypto goods and similar services should be controlled by enabling them to observe and assess subtle patterns in the Australian cryptocurrency markets. Token mapping has never been done before. This new practice is to make sure that they're up to date with the latest consumer trends and also provide their people with security that they need to conduct their transactions safely. Decrypt was informed by a Treasury Department representative that this year the token initiative will take place. The results of this consultation will determine when laws and regulations will change. So why is understanding crypto markets important for making these regulations? Jim Chalmers, Australia's treasurer under Prime Minister Anthony Albanese, stressed in a statement recently the significance of thoroughly comprehending the cryptocurrency markets before formulating legislation. According to Chalmers, the previous administration dabbled in regulating crypto assets but hastily rushed straight to choices without first knowing what was being controlled. The Albanese government is approaching these threats with more caution to find out what's in the ecosystem. Josh Frydenberg, Chalmers' predecessor as treasurer, promised to bring cryptocurrency out of the darkness by establishing a thorough regulatory structure in December 2021. Frydenberg and the remainder of the government of Prime Minister Scott Morrison were, however, defeated in a federal election in May. The Albanese government currently asserts that its strategy for cryptocurrencies will be more complex, cautious, and reliant on study than that of the previous administration. But it may not be as innovative as it seems. An analogous token mapping operation will be done by the end of 2022. The data acquired from that project was meant to inform the development of a regulatory framework for cryptocurrencies the next year, as well as other papers and discussions. A public comment paper that elaborates on the token mapping process will soon be made available, as reported by the Treasury Ministry. The Albanese government's timeline for passing laws based on the results of the exercise is still unclear. The Treasury didn't provide a quick response to a call for comment after being questioned for more clarification in this regard. Next up, how is this token mapping being used to regulate crypto? The main goal of the token mapping is to categorize tokens that are based on different asset kinds, taking into account both their underlying technology and other attributes. This is especially useful for identifying different asset classifications. Based on the existing rules, the government will be better able to manage the industry and fill up the legal gaps for the asset classes that require specialized legalization. The token mapping procedure that includes identifying the properties of asset tokens that are available in Australia. Jim Chalmers further said that the crypto industry is currently mostly unregulated, and they need to seek to strike the correct balance between embracing new and creative technology and protecting consumers. Jim Chalmers added that the process of token mapping will assist the government in better developing license frameworks by taking into account the exchange's custody responsibilities and providing more comprehensive customer protection. Australia hopes to tap into this new way and to test out how effective it can be for crypto dealings. They might adopt it on a large scale once they see how it works for them. If they get positive consumer feedback on it and the greater security that they're aiming for, then they'll continue using this approach in the future. Now, for the first time, Australia's Labor Administration stated its intentions regarding regulations. Since its election victory 3 months ago, Australia's new Labor government has never before declared its desire to enact legislation governing cryptocurrencies. The purpose of this exercise is to inform the public about the potential risk related to the cryptocurrency business while simultaneously protecting customers from market volatility. The government also made mention of the cryptocurrency market that has been linked up with important sporting events. This has additionally compelled the government to develop a strategy to tighten rules. In January, Crypto.com agreed to a $25 million sponsorship agreement with the Australian Football League. In February, SwiftX, a domestic exchange, agreed to a 3-year contract for an undisclosed sum of money. Finally, what will these new regulations mean for the future of crypto in Australia? In a statement issued by the Treasury, he claimed that although Australians are seeing a digital revolution across all areas of the economy, legislation is trying to keep up and adjust with the crypto asset industry. While investors may be concerned about how regulation would affect the well-liked blockchain technology, Professor Tan argues that regulation has several advantages, including creating a framework for fair taxes, assisting in the prevention of fraud, and bolstering investor protection. Since cryptocurrencies like Bitcoin have been regulated and subject to taxation for a while, nothing has changed for investors in established crypto assets, according to Professor Tan. The government will be able to assess whether our current financial services rules are sufficient or whether they call for their own unique cryptocurrency regulation thanks to the planned token mapping, which enables the identification of new and evolving forms of crypto assets. The government does not want cryptocurrency assets to become lost in the current regulatory system. Now, only time will tell how successful their policies turn out to be. Next, in other related news, we have Bitcoin falling below 20,000 US dollars. Today, Bitcoin, the leading crypto asset by market capitalization, fell once more under the US dollar 20,000 level. Bitcoin was trading at US dollar 19,888 on Sunday. It's fallen to 19,858 US dollars before this small comeback. It's currently decreasing 1% each day and 6% each week. Overall, the price decreasing 60% over the previous year and 16% over the previous month. According to CoinGecko, Bitcoin is down 71% from its all-time high of 69,044 US dollars, reached in November of last year. This year, Bitcoin made several trips to the $19,000 barrier, first in June and then once more in July. It has been above that barrier since the middle of July, but it touched it again today. Next up, Bitcoin Depot, a U.S. provider of cryptocurrency ATMs, will merge. With the agreement between GSR2, Metora Acquisition Corp., and Bitcoin Depot, a significant U.S. crypto ATM provider, the two businesses can now merge and list on the NASDAQ. According to a statement released by Bitcoin Depot after the merger, the company would have an anticipated post-transaction equity value of around $885 million US dollars and $170 million US dollars in cash to fuel its future expansion. According to the company, the net profits from the transaction will be up to $321 million US dollars in cash kept in a trust account. They will be put to use in order to use Bitcoin Depot's working capital, complete acquisitions, and scale the platform and assortments of items offered by the business. Subject to regulation and stockholder clearances, the business combination is anticipated to close by the first quarter of 2023. Though its current alliances, Bitcoin Depot can grow as well as develop new partnerships and markets. Finally, NFT market rises in a day. Elliptic reports over $100 million in NFTs were stolen in a year. Over the past 24 hours, the market for non-fungible tokens has experienced a relief bounce in sales volume, while blockchain analysis company Elliptic discovered that over $100 million US dollars in NFTs have been lost in theft over the previous year. Over the past day, blue chip NFTs overall trading volume has increased. On Thursday morning, Yuga Labs Bored Ape Yacht Club reported $2 million US dollars in sales, almost 35% up from the day before. Similarly, over the previous 24 hours, sales for other high-profile collections such as Mutant Ape Yacht Club, Azuki, and CryptoPunks increased roughly by 56%, 311%, and 11% respectively. Over the previous 24 hours, the floor price of popular collections, including BAYC, MAYC, and Other Deed, also rose marginally, climbing about 9%, 8%, and 6% respectively. The NFT market has increased just as the initial upgrade heading to the Ethereum merge has been scheduled on September 6th, with the merge's full completion anticipated to take place between September 10th and 20th. It is important to remember that the NFT market is still close to its early 2021 lows. NFT sales volume on the Ethereum blockchain have decreased recently, according to statistics from CryptoSlam, from an all-time high of $628 million US dollars on May 1st, 2022 to about $12 million US dollars, a decrease of more than 98%. That's a wrap for this video. What do you think about this new crypto regulating policy by Australia? Do you think it'll be successful? Let us know in the comments below. Make sure to give this video a thumbs up and subscribe to our channel for more videos like this. See you in the next one.